Welcome to this deep dive. Today we're digging into Viasat's Q2 fiscal 2026 earnings call. Our goal here, as always, is pretty straightforward. Get you the key numbers fast and figure out the strategic so what behind them, especially for experienced investors like you.
That's exactly it. And listening to the call, management really hammered home three core financial priorities. It wasn't about flashy new initiatives. It was about, first, building out their key franchises. Second, really focusing on generating free cash flow, FCF. And third, optimizing that long-term capital structure. So we're looking for the proof points, right? Are they actually delivering on these?
Okay, let's start right there with those proof points in the results snapshot. What did the headline numbers tell us? Operationally, things seemed, stable.
Stable's a good word. Revenue hit $1.1 billion. Now, that's only up about 2% year over year, some modest growth.
Right, 2%. But you mentioned priorities like cash flow. How did profitability and cash look?
Yeah, that's where it gets more interesting. Adjusted EBITDA came in at $385 million. That's actually up 3% year over year, which gives them a pretty solid 34% margin. And maybe more importantly, the net loss improved quite a bit. It was down to negative $61 million. Compared to negative $138 million in the same quarter last year, Q2 fiscal 25. So significant improvement on the bottom line.
Okay, better profitability. And that cash momentum you mentioned, deleveraging depends heavily on that, I imagine.
Absolutely. And this, I think, was the real success story they wanted to highlight, free cash flow. They generated $69 million in FCF for the quarter. That's now 3 positive quarters in a row.
3 in a row, okay.
Yeah, and if you look at the trailing 12-month, that FCF number is now $147 million. It definitely signals they're getting better at converting earnings to cash, especially post-Inmarsat merger. Oh, and awards look strong, too. $1.5 billion in new awards, which is up 17% year over year. That pushes the total backlog up to $3.9 million.
$3.9 billion backlog. Nice cushion. So if the cash conversion is improving, let's dig into where the revenue's actually coming from, because you hinted the segments weren't all moving in the same direction.
Not at all. If you look at communication services, the CS segment, overall revenue was $837 million. That's up just 1% year over year. But like you said, that tiny overall growth, it hides some really big swings underneath.
Okay, so what was working? Aviation, I assume, continues to be a driver.
Definitely. Aviation revenue jumped 15%. And the number of commercial aircraft they serve with in-flight connectivity, IFC, that was at 11%. So strong demand there. Government SATCOM was also a bright spot, up 9%.
There's always a but, isn't there? What was the drag?
Yeah, the but is fixed services. That revenue line dropped 16%. Ouch. The U.S. fixed broadband subscriber base just keeps eroding. They finished the quarter with only 150,000 subs.
Wow, 150K.
Now, the ARPU, the average revenue per user, that's still high, $113, but they're just losing volume. Facing a lot of pressure from fiber, obviously, but also the low Earth orbit guys.
Right. That fixed broadband challenge really underscores why the performance of the Defense and Advanced Technology segment, DAT, is so crucial for them. How did that do?
DAT revenue was up 3%, hitting $304 million. And, the underlying health there looks pretty good. Their infosec and cyber product revenue specifically up a strong 14%. That's really being driven by demand for their high assurance encryption products. Shows they have a real edge there.
In the future pipeline for DAT, did they talk about bookings?
They did. The overall book to bill for DAT was a very healthy 1.5x.
1.5x. Okay, that's strong.
Very strong. And maybe even more telling, every single business line within DAT had a book-to-bill over 1.1x. So broad strength. That backlog really gives them visibility for the next few years, even if there's some, lumpiness sometimes in specific areas like space and mission systems.
That 1.5x number certainly seems to back up their market position. Did management talk about any longer-term secular trends driving that DAT strength?
Yeah, they did touch on something pretty significant, actually. It's this whole move towards quantum-resistant cryptography. Basically, the looming threat of quantum computers means that current encryption standards will eventually become vulnerable. So there's this massive global need to upgrade security infrastructure.
A forced refresh cycle, essentially.
Exactly. And it's not a small thing. We're talking potentially a decade-long overhaul. Viasat, with its focus on that high-assurance, government-grade encryption niche, is sitting right in the path of that huge tailwind.
Okay, interesting secular driver there. Let's pivot a bit. Talk about the balance sheet. Deleveraging was a major theme on the call, right? they had that legato payment come in.
They did. $420 million lump sum came in just after the quarter ended, so it wasn't in these results, but it's cash in hand now. And management sounded very focused on being disciplined with it. The plan is to take about $300 million of that and pay off the rest of the original Inmarsat term Loan B. Doing that is expected to save them around $23 million a year just in cash interest payments.
Straight to the bottom line, or rather, straight to improving FCF.
Exactly. Helps FCF directly.
Which they'll need, because they still have those big capex numbers tied to finishing Viasat-3, don't they? How does that spending impact the FCF outlook for the rest of this fiscal year and into next?
Good question. Total capex for this fiscal year, FY26, is still guided at $1.2 billion. And the key part is that there's still about $200 million left to spend out of the $250 million total for Viasat-3 completion just in the second half of this fiscal year.
So the spending is front-loaded.
Kind of, yeah, or at least heavily weighted towards completing these satellites now. Because of that remaining spend in the second half of FY26, management actually guided for negative FCF for these next 2 quarters.
Okay, negative FCF near term.
But, and this is the crucial bit, they were very firm in reiterating their guidance for positive free cash flow for the entirety of fiscal year 2027.
Right, so a dip now, but a clear target for positive full-year FCF next year.
Yeah.
That gives investors something concrete to track.
Absolutely. It's a clear goalpost.
And all this financial discipline, the debt pay down, the push for FCF, it's all driving towards that longer-term leverage target. Remember?
Exactly. They want to get net debt down to 3 times adjusted EBITDA, or even lower. That's the end game for this phase.
Okay, makes sense. So that brings us nicely to the strategic assets themselves. Viasat-3 is obviously the elephant in the room. Flight 2 launch got scrubbed again recently.
Yeah, unfortunately. Seems like an issue with an Atlas booster valve this time. They said they're targeting launch within about a week of the call, so hopefully soon. But yeah, delays happen. The potential impact, though, once it is up, along with Flight 3, it's huge.
How huge?
Together, those 2 satellites are expected to roughly triple Viasat's total available bandwidth capacity. Triple.
Wow, triple the capacity. The challenge then becomes filling it profitable, I guess.
Precisely. They'll have the capacity. The question is how fast they can monetize it, especially in those high-value markets like aviation and government.
Beyond the satellites themselves, what about portfolio strategy? There's been talk for a while about potentially separating the government and commercial businesses. Any update there?
Yeah, they confirmed the board's committee is still actively looking at that, evaluating the pros and cons. But management also brought up an interesting complexity, this growing demand for what they call dual-use systems. Think like Europe's IRIS² program.
Dual-use meaning?
Meaning systems that need to serve both national security purposes and carry commercial traffic. In that kind of environment, Viasat argued that having both government and commercial capabilities integrated under one roof might actually be a competitive advantage. So it complicates a simple spin-off decision. They're weighing that operational advantage against, what the financial markets might prefer in terms of pure play companies.
Interesting tension there. Maybe that complexity is why they seem to be leaning into joint ventures, particularly around their spectrum assets. Talk about the Equitest JV.
Right, the Equitest joint venture with Space 42. This is really their play to modernize and, frankly, monetize their mobile satellite spectrum, or MSS infrastructure, especially those big, globally coordinated S-band assets they got with Inmarsat. The strategy seems twofold. First, use shared infrastructure through the JV to lower their own capital costs. Makes sense. Second, create a platform that could be attractive to others, maybe regional players, especially those interested in the whole direct-to-device or DTD market. Management made it pretty clear they know this spectrum is valuable. They even referenced recent deals suggesting potentially very high valuations for comparable spectrum. So unlocking that value is definitely a priority.
Okay, so we've hit the numbers, the cash flow execution, the different segment stories, the capex outlook, the big strategic assets like Viasat-3 and the spectrum. I think that covers the core of the call, which means it's time for our final segment.
All right. And let me just jump in with the standard, very important reminder. What we're about to discuss is purely for informational and entertainment purposes. It is absolutely not financial advice. Do your own research.
Absolutely critical reminder. Okay, this is our trade ideas segment. We look for an outrageous, maybe, but still plausible trade idea based on the themes we just discussed. What's the pitch this time?
Okay, I'm calling this one the spectrum arbitrage play. Here's the thinking. We just talked about how management is laser focused on monetizing that global S-band spectrum, right? Through Equitest and potentially other means. And crucially, They explicitly mentioned in the Q&A that comparable spectrum deals have implied valuations up to $20 billion?
$20 billion.
Yeah.
I mean, that's way more than Viasat's entire current market cap, isn't it?
Exactly. The market today seems to be assigning almost zero value, or at least a heavily discounted value, to this massive spectrum asset sitting on their books.
Wow.
So the thesis is, go long VSAT. The bet is that the strategic review, maybe nudged along by some activist interest down the line, who knows, leads to a major spectrum monetization event. That could be a big cash infusion from a JV partner like Equitest expanding, or maybe they sell off a slice of the spectrum, or even some kind of targeted spin-off, something that forces the market to recognize that hidden value. And the key is that this catalyst, the spectrum monetization, could hit before the market fully prices in that FY27 free cash flow improvement that management guided to.
So you're betting on an asset value realization catalyst, not just waiting for the organic operational turnaround to be fully reflected in the stock price.
Pretty much. The trigger is seeing real progress on Equitest, getting firm partnership deals signed, or maybe a clear announcement about separating parts of the business. That kind of news could shift the narrative very quickly, from Viasat being seen as just this complicated post-merger satellite company to being viewed as an asset-rich story with growth potential. That's the arbitrage play.
Interesting angle. Okay, let's wrap it up with the key takeaways then. Solid quarter on execution, especially generating cash. That's 3 straight positive FCF quarters. Deleveraging is happening using that legato cash. The big strategic assets, Viasat-3, are finally nearing deployment, which should triple capacity. And you have those defense tailwinds like the quantum-resistant crypto cycle providing long-term support.
Definitely. And maybe one final thought for you, the listener, to chew on as you do your own analysis. Think about that imminent tripling of bandwidth from Viasat-3. And think about Viasat's focus on winning in high-value markets like aviation Wi-Fi. Which customer group, maritime, aviation, maybe even fixed broadband, despite the declines, which one is going to absorb that new capacity first and fastest? And what could that mean for ARPU growth in that segment? Something to watch.
That's a great question to leave folks with. Lots to track there. Thanks for joining us on this deep dive. Keep digging into those details.